There we go. Test, 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 test. Could you hear me now? All right. I think we're now back online and we could start over, and that's quite okay. It was just like a little bit of a test run, a warm up run. It's Monday, time to get going. Nothing. There we go. All right. We're online now. And so, well, that's fun. We get to start over though, and that's all good. Nothing like a warm up lap on a Monday. Hope everyone is well and doing great. Um, it's been a wild weekend. It's been a wild 48 hours and a lot for us to digest. I want to get into it right now with you. There we go. Appreciate y'all. Give everyone a little bit of time. No one gave a thumbs down during that. Wow. All right. So the question of the day, Jesse this morning asked, what are the central banks going to do and when are they going to act? All right. So let's start there. That's the most important thing as we begin this morning for us to kind of address. It's been wild right now, and I want to take a look at what is going on, what we think is going on next, and find out how we could best continue to position. All right. So it started off on Friday late in the session. Powell came in and said basically he's going to do whatever it takes, pulling a Mario Draghi, saying that the Fed is going to be accommodative as needed. What that means, we'll figure out in a little bit. But that was followed up. By the Bank of Japan on the Asian Open yesterday, who also came in and didn't act, but basically said that they're going to make sure the liquidity is there. And then we heard a similar statement from the Bank of England. There was a cut overnight somewhere in Asia. I don't remember who it was. And tomorrow tonight here in New York, tomorrow in Australia, we're expected to see a rate cut here of Australia. It'll be interesting to see what happens on Wednesday with the Bank of Canada, because certainly the market's not pricing that in right now. If they do come in and cut, which is entirely possible, I would expect much further depreciation of the Canadian dollar. As far as the US, the FOMC is scheduled to meet March the 18th. I do not think that they will cut before then. I do not think they want to cut before then. I think that they have done their job through this verbal intervention. And you can see the markets although futures are down 0.5%, they've stabilized. Look, we have a lower low. These two big pin bars, the markets have stabilized. That's what they were trying to do with their verbal intervention. If they don't have to act, better for them, because they are running out of firepower. Now, the coronavirus has been spreading rapidly across the world. In China, all of a sudden it's gone almost, except in Wuhan. But it does appear that traffic in Beijing and Shanghai returned to normal yesterday. So let's see whether or not we get a second wave as more people are up and about and interacting. If we see a second wave appear in China, that would be very concerning. The US right now, cases are spreading, and it's expected to increase over the next 2 weeks as they actually start testing there. So that's going to come back in and weigh on the markets. And so the central banks right now are basically doing their job through verbal intervention, and it works, because I know myself on Friday, after Powell came out and said that, I was, at that point, I unloaded my Australian dollar Swiss franc trade and my New Zealand dollar Swiss franc trade. And you don't want to, if the central banks come in and cut rates initially, the markets are going to rally off that. What do I mean by that? You're going to see the equity markets really rally on that. You're going to see probably the Japanese yen come off initially. I do believe personally that any rally will wind up failing and being faded. But the thing is that they could be pretty strong any type of reaction to any type of move from the central banks, which makes things right now really difficult. So I just want to definitely say that right now, last week was kind of easy to trade. Um, this week right now is very difficult. So let's figure it out. I want to start here in the DXY. You can see that we came back all the way into our support at 97.30, and we're getting a bounce off of there so far. All right. Now, longer term here on the dollar, it's tricky, right? Um, Everything is tricky, and right now is one of those cases. I'm expecting the dollar to rebound over here. This is while we were trading up here just a week ago, 10 days ago, if you could have told me, hey, listen, if you want to buy dollar, we're gonna be trading down to 97.30 in just a few days, I would have been like, okay, I'll definitely step in there, and I'll be looking to short the euro US dollar. Well, here you are, right? Are you ready to do it? I did this morning, and I'm ready for it. I listen. I believe that I believe we're going to see a stronger dollar, first of all. Second of all, I believe that the US economy is in by far better shape than the European economy. And I think this is a gift to position in over here. How much room could there be to the upside on the dollar? I don't know. Of course, I could be proven wrong. Um, you know, do I think that we're going to trade up here to this level between the last high that we saw at the end of December and maybe this resistance up here? I don't think so. I don't think so. But I'm ready to be proven wrong. Right here, though, I think this is a gift or an excellent opportunity to get long here dollars, especially against the euro. And this is a level that I have my eye on. We're here. I'm taking it. Does that mean that it's going to work out or it's going to be easy? No, we've seen a bunch of inflows into the euro over the past 10 days. I thought this move down was strong. I thought this move down was so strong, and it was. But this move to the upside obviously has been stronger, right? Where were the stops? Well, I think some people would have stops up a little higher. So I don't know how many stops were taken out overnight. Again, nothing's easy. Mima, here we go. Here we go. So that being said, the only thing that seems to be acting rationally to me is Bitcoin. So let's take a look at it. First of all, everyone knows my feeling on Bitcoin. And we're getting close. We're about 2 months away, a little more than 2 months, 2 months and 10 days or so away from the halving. Of course, I expect a little volatility around the halving itself, but the way that I look at it, the halving, the price of Bitcoin should be 11,400. If at that point, and just really quick, because this is really important. The way that I came to that number was in the first halving, I took the high and the low. At the halving date, we traded exactly an average between the two. That happened in the second cycle as well. I took the high and the low when the UTXO tickets started increasing on the network. And the same thing here. If you take the high of 19,800 and the low of 3,200, you get 11,400. So that's what I believe is fair value for Bitcoin at the halving date. If we're below it, I don't think that we sell off. If we were trading above it, then I would expect the pullback. But that's more or less where I expect to be around the pullback. Right now, we're trading, a couple $1,000 below that. So for me, this is an opportunity to step in to buy. The 8,500 holding was really bullish for me. I was really expecting even a pullback to 8,200 once we lost 9,100. So this looks pretty bullish. I don't know if we're going to break back above here or test this resistance first. There's resistance right above us at 9,100, and there's also stronger resistance up at 9,475. But the fact that right now or so far we're holding 8,200, that is 8,500 is really bullish for Bitcoin. I don't think we trade below 8,200. I wouldn't be surprised if this didn't hold, but right now it looks like it's holding. If we get back about 9,400, I don't think we ever see this again. Again, these are just my thoughts. I've been pretty intense on my analysis and views of Bitcoin, because I think it's the most important trade. It's been the most important trade of the past decade, but I think it's the most important trade of the decade to come. We have I'm pretty sure that the markets are going to key off of today's ISM manufacturing number. So Euro US dollar traders, be aware. I kind of saw at the time that New York traders get to their desk this morning. Initially, you saw here this large spike. This looks, I mean, this definitely looks like it could be a reversal. You get a lot of traders caught on the wrong side over here. It looks like New York's playing game so far. We gotta obviously, we have this support over here right now that we would have to trade below, and we still have a lot of work to do to the downside until this starts turning technically bearish. Obviously, right now it's extraordinarily bullish with a lot of momentum, but it looks like New York stepped in and took the price higher to reverse it right into the resistance. All right. Support and resistance are, I believe, are the most effective technical analysis tools that you could look at on the chart. You have seen over and over and over again how price comes into those points of interest. Yeah, let's look at everything, Martine. Let's look at everything because it's Monday. And well, I do want to say that I think these are very dangerous conditions to be trading under, first of all. I do want to say that. And after a wild ride last week, I kind of have the posture of sitting back a little bit here, unless something becomes glaringly obvious. So this failed break I see on the New Zealand dollar US dollar, is it a failed break? No, we're coming right back in right now into this area over here where my mouse is and testing that resistance. It does appear like it's going to be a false break, and so I could be wrong here. In my mind, we're going to see the U.S. equities turn green here. We're going to see a little bullish. I think it's hard to time the market right now. So that's my first bullet point. Right now is the market's jumpy, nothing's clear, and it's hard to time. So I do believe that we're going to see further escalations across the world of the coronavirus, right? And that should be doubling every 7 days still, the new cases outside of China. And the question is timing. But right now, I think it's more of waiting and watching for a pullback and to see where we pull back into. So I think it's going to be a little while before we put on new lows over here on the New Zealand dollar US dollar. As far as areas to lean into, I think it's too soon. I think it's too soon over here. Anyone going counter trend on the Australian dollar, New Zealand dollar, that's tough. Also, you have the Australian dollar, Australian central bank set to cut rates tonight, right? Tomorrow in Australia. So it could be jumpy. What the difficult part is that if the Australian central bank cuts rates, it's already priced into the Australian dollar. So it's a case where the Australian dollar could actually appreciate. I know most people think central banks come in and cut rates, and then you're going to see the currency depreciate. Not always. You also have in 2 weeks the the Federal Reserve set probably to cut rates. So I'm not sure how the market's going to price everything in is, and I think it's like right now, aside from being short the euro US dollar, which I'm willing at that level to jump in over there. I think it's unless something during this session becomes glaringly obvious to me, I feel like it's better to sit back and wait until something is obvious and come in there and take it. Because right now things are unclear for me. I want to jump in, meanwhile, look at that monthly chart. If you have a chart with those trend lines drawn in, do you post it for us? I no longer have my lines. Yeah, Mima, if you have a chart that you could share, please do. I would love to see it. It'd be very helpful. Again, we have in about 35 minutes the ISM manufacturing come out of the US. I think that's going to help move the dollar, whether or not we stay in expansion or move into negative territory. I personally feel like the US equities are stabilizing over here, and with good reason. People have the fear that the central banks are going to come in and step in. I feel like we're in a little period here of a reprieve. And then after that, we might have our chances to go and sell. Gold was up huge and now is coming back down almost to unchanged. Silver is almost unchanged. Those moves have been faded. And of course, that could happen here where we could see even we could see the markets roll over. That's why I say it's so jumpy and so unclear. You know, why I would not be surprised if we traded up 1% or 2 today. I would not be surprised if we also traded down 2% or 3% today. So it makes things really difficult, and I feel like it's a really good time to kind of let things develop a little clearer before jumping into anything. All right, I want to take a look at the markets overall though, and we'll start here back with WTI, which is definitely bid today. We have OPEC meeting soon. Russia is now saying that they're open to cutting production. Probably what's going to happen out of there, out of the result of the OPEC meeting is they're going to wind up cutting production, as they should during this low demand period. And I think long term though, it's a question of looking for a place for this to come into, and looking, in the downtrend, look to sell into that resistance right now. Probably we're going to at least float up and check 49.56 next. That's what I see. Gold and silver. So there's a lot of theories about why prices come off. There were talk of people getting margin calls that needed, to cover, they needed to sell their gold and silver to cover other trades. Probably not that. I think it's more of in the type of environment that we were in last week. We saw the yen bid up. That seems to be the reflective trade. I thought it was very unusual seeing the euro rising like that. I don't know if that had to do with Germany talking about some stimulus measures, or it was initial reaction to the U.S. looking to perhaps be cutting rates, or what I think it was is I think it was with the U.S. markets falling, a lot of capital was being pulled out of those markets and being brought back to Europe. That's what I believe it was. U.S. dollar, Japanese yen is now currently well below our breakdown point of 109.71. All right, this looks like it's probably just entering a period of consolidation over here. I think the Japanese yen, which has come very far, very fast, is just looking right now to retrace a little bit, or at least I think it's even fairer to say that until it does retrace a little bit, I will not be looking to take new positions in it. I would ideally like us to come back down towards this 91.50 level. All right. Euro jumpy this morning, continues to be. Again, let's wait a half hour to see what happens here on the euro US dollar and with the dollar with the ISM print. Um, Markets opening down just a little bit, not so bad considering the situation over here. I have no idea where they're going to lead. Let's take a look around. There's a lot of talk right now in the UK as far as negotiations going south in the next 2 weeks. That's probably just posturing, but nevertheless, let's be on alert for some volatility here in the pound. Pound New Zealand dollar, I'm expecting the New Zealand dollar to continue just to retrace a little bit. I'm going to wait and watch. Let's see what happens if we get another look down over here at the whole number at 2 here on the pound New Zealand dollar. Again, right now, just going to wait and watch. I'm going to wait for something to appear obvious. Australian dollar, New Zealand dollar continues to be within our range here, this consolidating period. I don't know what's going to happen initially off of any type of rate cut here on the Australian dollar. I would assume that the price action we see is come back down again towards this area of support. But I believe that the New Zealand central bank is also getting ready to cut, and maybe even 50 basis points. So we'll just watch it and wait. We're still within this range we've been watching. Look at this daily candle, took out the stops on both sides today. So very jumpy. Again, that's the theme of today. Today's jumpy. Euro, sharp appreciations versus the Canadian dollar. The Canadian dollar is not something that I want to step in to trade against the euro. Both the euro has been very bid, and this might give opportunities against other currencies. Against the US dollar is where I'm looking to play it, right? I believe in dollar strength. A lot of people are, of course, calling for the death of the dollar. I don't believe that. I don't see that. So I'm not looking to take, although we're into some pretty strong resistance over here, I still believe there's even a good chance of a surprise rate cut over here, or at least some downward guidance when the Bank of Canada meets on Wednesday. So I don't want to step in over here, that's for sure. Australian dollar, Swiss franc still looks so beautifully ugly. And this was a phenomenal trade for myself last week. I got out of it on Friday. We haven't traded lower. It looks like a great exit. I'm waiting, and I'm just waiting. There's nothing for me to do here at all. We are so oversold, and I need a bounce before I could even think about getting short again. Not only a bounce, I need to see, you know, it's too soon to even consider trying to reposition in. Um, this is the New Zealand dollar, Canadian dollar. Again, both of these are weak currencies, although I kind of have this feeling, even with the expected rate cuts, we're going to see a little appreciation in the Australian dollar, New Zealand dollar, two that have been hit the hardest. But I'm looking to sell those rallies and not versus the Canadian dollar. I'm looking to play those versus strength, not weakness. I would expect here the New Zealand dollar is able to hold the support now and possibly look up over higher. Actually, at the end of our analysis, I'm going to come back over here and reevaluate this. What's difficult over here is I'm not sure when the New Zealand Central Bank is meeting. When is it meeting? Do I see it on my chart over here? I think they're looking at perhaps. Oh, I don't know why I'm missing that. Huh. So if they're not on the docket in the next couple of weeks over here, no, they're not. I don't see them right now at all. They must not be meeting until April. All right. That's something maybe to come back and look at, and I will come back to it. Euro Swiss franc. Okay, she's holding. She's being every time she gets up there, she's sold. Listen, I'm staying away from it. If we did come back, if we got to much higher levels, if we did get to much higher levels, then I would consider selling it. There's no way I'd consider buying this pair. And right now, that's not even on the radar. Swiss franc doing great damage here to the US dollar. Wow. I want to see how big of a support level we're in right now. Looks pretty decent to me. I don't know about all of you. This looks like an area of interest, perhaps stepping into the long side here. Let's see what that ISM number comes in at over here. But this looks a little attractive down at these levels to me. We'll just come back to it. Again, right now I'm on like the posture of like, unless something becomes glaring obvious, I don't want to be involved in it. But looking for that opportunity. Euro US dollar. We're on a weekly chart over here. Look at these levels she's trading up at. We're expecting a rate cut tonight out of the Australian Central Bank. Probably not the time that you want to jump into this trade for any strength on the Australian dollar, but maybe a spike off of a rate cut would be an opportunity here to go ahead and look. But no, that's not in play. So we're about now 6 minutes into the open. So far, U.S. equities down 1% now. Seeing that volatility increase. Canadian dollar, Japanese yen, strong downtrend now. I expect further weakness here. Nope, nothing. Again, something. The markets right now are very unsure to me. It's not an easy time to be trading. So that's really important for me in my mind to have at the forefront. Pound Japanese yen has come off very hard, very fast, sitting here at 137. It's a little bit of area of support, that's for sure. The next couple of weeks could continue to weigh on the pound. Not a place that I would look how this came back, broke down this resistance level, jumped up, tested it, faded again. It's too jumpy for me. Things are very uncertain. Australian dollar, Japanese yen, also looking for the possibility of this retracing upwards. There's no way that I want to come in here down at these levels and continue to jump on that momentum. Only because again, I'm just the central banks have me jumpy. If they do act, if they start cutting rates, if you see any statements, things could react. So I rather just, although I believe any move will be faded, we haven't had a retrace enough where it's attractive to me to step in. So the only retrace that I see that's attractive to me so far is I believe this has come really hard and really fast. Again, this was such a strong move, and we've outdone it to the upside in less time. So that's really hard and really fast, and maybe the market's pricing something I don't know, but I'm willing at these levels to take a chance and an opportunity. Everything else needs to come off a little bit further before I can get excited about it. US dollar, Canadian dollar. The breakout is in effect. We do have a little bit of a retrace over here. This looks interesting to me, actually. But so again, I am expecting though for oil to be a little bit bid here up into the 49 area. That could help put a little bit of a bid under the Canadian dollar. So let me just wait a little while. I think right now is the time to exercise patience and just wait for a little bit better of opportunity to appear. So this is the one time yeah, I believe we're going to see a lot of volatility on the Australian dollar after the central bank comes in, if they cut rates. But I have a feeling if we see some volatility, if we see the Australian dollar spike off of the rate cut, that move might be faded. I know it seems so counterintuitive. 324. Thank you for that. Nice trade, DJ. Short on Swiss franc. There we go. A few weeks out. No forecasts yet, even on it. We're watching the ISM this morning, coming out soon. Nice trading. Obviously, the ISM today should have an effect on the dollar. What else? See the Australian dollar jumping here, I believe, is because it's come off so hard. It's just retracing a little bit. It has a lot more work to do before I get interested in it. Pound Australian dollar into this area right over here. This area is now support, and that support's holding. Again, I would love to see some spike down on the Australian dollar after the central bank rate cut today, if they do cut rates, and we see a spike in reaction. I think that might be where I'm looking for opportunity, actually long the Australian dollar. So where that might be the best place to take it might be the Australian dollar, Japanese yen. Still got about 18 minutes to the ISM numbers. That's the number I'm looking for right now. Is again, so my view today is that the market is very jumpy. You can see the S&P probably waiting for that print all over the place. I don't think that this is a time to be looking to take new positions. There are some counter trades available. So one of those counter trades that I see is on the Australian dollar. But with the central bank meeting later tonight and expected to cut, I'd rather see a spike before looking to take any opportunity on the Australian dollar. Thanks, Steve, for that. 24th of March. Just to look at charts, look at this. This is when a carry trade falls apart. Look at this move. Has been big on the US dollar, Mexican peso. Trend lines are so effective. Look what happened. The spike above, and then when it holds, the big move. This is why trend lines are so effective over here. New Zealand dollar, Swiss franc. This is also a phenomenal trade that I for myself last week. I took profits. We traded lower actually today than the lows of Friday. That's fine. Again, the move and definitely on the Swiss franc, the moves last week were so pronounced, so big. Again, although I would love to take more sales because I believe that the situation is going to continue to escalate. I believe any rallies are going to be sold, but I want to see a rally first. And we have not yet seen any type of rally. And I have no idea how long that rally is going to last either. Um, so right now, being unsure, the best thing for me to do is just continue to wait because things will get blaringly clear, which they're not right now. Wild ride here on the US equities. And I don't think that's going to end anytime soon. We're going to wait. We're going to wait for this ISM number and see what happens next. There's a pretty clear view of my overview of my feeling on the market right now. And I believe that, for example, if I get a play here on the Australian dollar, it's an aggressive play. Obviously, it's counter trend actually after even a rate cut, but that's something that I'm interested that I see on the horizon. The only other thing is right now is being short the euro over here as we come in to this level over here, and you know I need to see more. My plan is really accept it super counter trend in the Australian dollar. I think that's the way to play the rally that I do see coming. I can't take it today because I'm looking for that rate cut later today. But aside from that, I'm looking more for wait for a rally, and I don't know how long yet that rally is going to be. And I'm looking to sell that rally. I think any rally is going to wind up being faded, and lows that we saw on Friday, eventually I believe are going to give way. But as far as how long or how far back up we trade, I have no idea. But I do believe we're going to see some rallies. So Swiss franc has come off so hard so far. Japanese yen has had a very solid past few days. I want to see both of those come back in before I could reestablish positions on both. I also wrote that New Zealand dollar, Japanese yen. It was just Friday, and look at that trade. Took profit actually on the open, and I was hoping we were going to break over here, but just that verbal intervention alone from the central banks, I believe, is enough to hold it right now. So 10 minutes away. Be prepared if we have a big miss. If we trade below here, that could possibly continue to weigh on the dollar. Always on the lookout for what my risk is to the other side. What else? We have about 10 minutes here. What else? What are you guys focused in on? Anyone have any thoughts about the current situation, what we're seeing, what we're going to be seeing? Would love to hear them. But definitely pretty clear on my side. I really feel like after the moves we saw last week, after the trades we were able to take, it's kind of more on that defensive posture, meaning patience is important. Wait for the setups to come in after those big moves instead of waiting to chasing after them. If it wasn't for the Australian central bank meeting and expecting to cut, I probably would be long Australian dollars today. Look at the euro pound is into this big resistance up here. Huh. Well, that's interesting. This is something I want to keep an eye on now. Continue watching. Meanwhile, let me pull up that image you sent over of the euro US dollar on the pound monthly. One moment. It's weird. Well, give me a moment, please. Do you want to come back to the euro British pound over here? Again, the euro is quite the bit under it, huh? How long is that going to last? Are we seeing some type of new development in the eurozone, or is this a question of just a bunch of inflows where prices come too hard too fast? For me, it's an opportunity to fade long term, but I prefer stepping in the way of the euro with the U.S. dollar than the British pound at this moment. But this is something I want to keep watching for a sign of reversal at an important resistance area, because long term, I'm betting on the pound over the euro. Huh. All right, time check by 5 minutes. Meanwhile, let me draw in what you drew in. See if I could do this. I'll clean it up a little bit. Alberto, what's going on? Good to see you. This is a pretty important print coming up this morning. Markets is still mixed, barely down from their opening. It's about the best read I have on it. This is a pretty important print over here, and really important that the US doesn't go into contraction over here. All right, tomorrow we're not going to be live at our normal time. What I'm going to do though is I'm going to definitely prepare a video. I would say by the latest by 9:30 a.m. It will be published on the channel, giving an overview of the day. We're going to watch how price reacts. I'm not going to watch the print. I'll check the print afterwards. By the price action, I'll be able to know what that print was, I'm sure. I also want to watch how equities react off of that, not just the euro US dollar over here. Again, just also since we have a minute here, there's been a lot of talk about how Bitcoin wasn't a safe haven play. It was supposed to be a safe haven play. I never expected Bitcoin to be any type of safe haven play, especially in a US equities market sell-off. Absolutely not. Maybe in geopolitical risk, although I believe Bitcoin is an uncorrelated asset, meaning it's not supposed to act as a safe haven. It's not supposed to act as a risk on, risk off asset whatsoever. Here we come. We're about a minute away from the print over here. My eye is on the US equities. I want to see if they use the ISM as a way to key off over here. Also focused obviously on the dollar itself, using the euro US dollar as the barometer over here. The concern is if the US manufacturing goes into contraction under 50. Everything is basically unchanged. See what that was. What was it? A 50.1? How about that? I nailed it. 50.1. So that just doesn't really give us much to key off on at all. Again, back to that just really undecided. I think it's better just to wait. Jim Rogers, the legend, Jim Rogers had said once upon a time that he kind of just waits till there's money in the corner and then goes over there and takes it. Right now, there's no money in the corner whatsoever. This is you know we got to wait for things to be a little more clear. I don't see the clarity. If anyone else does, please let me know where to look. I want to look at it with you. I want to definitely be aware. There you go, Hanero. And that's exactly what I'm seeing as well. The opportunity is not today. And it makes sense after those amazing trades we had last week where there was so much opportunity. It's a question of waiting for that new opportunity to come. It's just hard for me to believe any move will be sustained right now. I think that the central bank's verbal intervention are enough right now. Um, of course we're seeing new cases pop up everywhere. I think that until things get really bad outside of China, or until we see a second wave occur in China, and God forbid we do. Hopefully we don't. But if we do see now, as people are returning to work, if over the next couple of weeks we see a bigger re, re, re we see new cases of the coronavirus beginning to arise, that could be a definite catalyst. But right now, I think Hernero put it best. We are consolidating, and not only consolidating, I'm looking for a retrace of moves we saw last week before we see an extension of them. Dollar so far selling off. Let's look at that, DJ. Nice trade over there again. Yeah, Nair. I just want to affirm that again, only because the whole thing is we want opportunity. DJ, I'm all about you pushing and holding your trades still. Uh, but I don't see the opportunity today, and I think being able to recognize that is your best move. Uh, Again, this is an aggressive trade that I will be watching later today. If the Australian central bank steps in and cuts rates, and I see a spike, a large move on the Australian dollar, once if that gets reversed, I am looking for a counter trade on the Australian dollar. Um, and I do know that is aggressive, but if we're going to see a retrace of last week's moves, there's a lot of room for the Australian dollar to move. Yeah, DJ, I assume you're holding that trade all of last week too. I took profits on Friday after Powell spoke, and then my last trade on the opening. All right, everyone. I think that's it for today. And you know what? The thing is, if there's no trades to take, the longer you're at the screen, the more of a chance of you actually taking a trade. Not good. You gotta be really sharp on your game. And it's really easy. Last week's market conditions are phenomenal for trading. They're not there right now. We are consolidating right now. Markets are actually selling off a little bit since that print, but they're too jumpy for me, and there's no opportunity. All right. So tomorrow I'm planning on doing the overview and uploading it by 9:30 a.m. If for any reason that changes and I'm going to be going live, I will update everyone through all the channels. Definitely through the YouTube channel, the community chat, and I'll let you know for sure. But that's it, everyone. Let's stay sharp and let's continue upping our game. All right, everyone. Have a great day, and I'll talk to you tomorrow.